Hello and welcome to the day ahead. It is Wednesday, March 30th. I'm Andrew Gagan. Well, the federal budget is done and dusted with a better than expected $78 billion deficit thanks to soaring commodity prices and a stronger economic recovery from the COVID pandemic laid out in my EFO.
And this budget will see unemployment go even lower, delivering more jobs and higher wages. The deficit for 22-23 is expected to be $78 billion or 3.4% of GDP. Over the next 3 years, this will more than halve to 1.6%. Net debt as a share of our economy will peak at 33.1% at the 30th of June 2026.
The cash splash comes ahead of a looming federal election, with the Morrison government's $8.6 billion cost of living package the headline of consumers as price pressures continue to rise. Treasurer Josh Frydenberg delivering some short-term relief by the way of one-off tax cuts and easing prices at the petrol pump.
Higher fuel, food and shipping costs are increasing inflation and stretching household budgets. Tonight, I also announce a new one-off $420 cost of living tax offset for more than 10 million low and middle income earners. Fuel excise will be cut in half. For the next 6 months, Australians will save 22 cents a litre every time they fill up.
But will it be enough? Consumers are already in the doldrums, with the ANZ's latest survey on confidence showing sentiment on personal finances at its lowest level since the depths of the pandemic in May 2020. Looking ahead, forecasts for economic growth have been revised up, with unemployment expected to hit a 60-year low at 3.75% later this year, with an average price of iron ore at just $55 a tonne. Wage growth is expected to accelerate while inflation is tipped to cool. But with the net debt edging ever closer to $1 trillion, economists have warned the budget is walking a fine line. Cautious extra money poured into an already strong economy will add fuel to the inflation fire. Up front, stimulus in the budget totals around 1% of GDP over the next 6 months. The moves run the risk of the RBA moving to raise rates faster than previously expected to cool any creep higher in inflation due to excess spending. We'll be keeping a close watch on some of the big winners on the local market from last night's budget papers. Telstra, high on the list. The telco should pick up the lion's share of the $811 million to fix mobile black spots. Listed cybersecurity names are also set to benefit after the near $10 billion committed over 10 years to strategy and security. And of course, the infrastructure plays on the tails of the mammoth $17 billion boost to the sector across the nation. More broadly, we're looking towards a positive start at today's trade. SPI futures sitting up 0.75% above 7,500. Taking a look at the state of play on global markets, and equities higher across the board on positive signs of Russia-Ukraine peace talks, with the Kremlin deciding to cut back operations near Kiev to increase trust during those discussions to end the conflict. Wall Street popping on that news. And the bigger picture, it was all about the yield curve overnight, with the 2 and 10 inverting for the first time since 2019 as investors priced in an aggressive rate hike plan by the Fed. The move is an historic warning a recession could be on the cards. Federal Reserve Bank of Philadelphia President Patrick Harker adopting a more hawkish stance, not ruling out a 50 basis point hike in May in order to reach a neutral Fed funds rate of 2.5%. Global oil prices fell by around 2% to $110 a barrel on perceived progress in Ukraine-Russia peace talks, and additional COVID lockdowns in China also prompting expectations of lower Chinese oil demand. This is ahead of tomorrow's OPEC Plus oil producers meeting. And base metal prices falling by as much as 4.9%, while the gold futures price fell 1.4% to $1,912 an ounce. And that does it for the day ahead. See you again tomorrow.